Welcome. We recently hosted an in-person seminar on budgeting for financial success, and we wanted to share the highlights with you. Our guiding idea at EdiFi is simple. When you know more, you can grow more. And one of the most powerful things to know is where your money is going. Let's start with a feeling. Have you ever gotten to the end of the month, looked at your bank account, and just wondered, where did all my money go? It's a really common, frustrating feeling. And that's exactly where budgeting comes in. First, let's be clear about what a budget actually is. It is not a boring spreadsheet designed to make you feel guilty. It's also definitely not a fun killer. A budget is simply a plan that gives you control. It's you deciding where your money goes instead of the other way around. When you have that plan, the benefits are real. You get clarity. You'll finally see exactly what you're spending on. No judgment, just information. You get permission to spend. A good budget includes your wants. It helps you set aside money for the things you actually value, whether that's a vacation, a night out, or your morning coffee. Completely guilt-free. You get less stress. Knowing you have a plan for your bills, your savings, and your spending is one of the fastest ways to lower financial anxiety. And you get progress. A budget is the tool that helps you break the paycheck-to-paycheck cycle, build an emergency fund, and start moving towards your bigger goals. So, that's the what and the why. But I know the next question is, where do I even start? In our seminar, we covered 6 key areas: what a budget is, why it matters, where to begin, how to build and maintain your plan, how to adapt when life changes, and how to plan ahead for things like holiday spending. We've broken it all down in the videos that follow. Check out the next video in this series, where we cover exactly where to begin. You've got this. If you've ever sat down to figure out your finances and just didn't know where to start, this video is for you. The good news is, getting started doesn't require a finance degree. It just requires knowing 2 numbers: what's coming in and what's going out. Let's start with income, the money coming in. Step 1. Figure out your take-home pay. That's your income after taxes, the actual amount that lands in your account each month. If your income varies, maybe you work shifts, pick up overtime, or have a side gig, use your lowest typical monthly amount as your baseline. It's better to plan with less and have extra left over than to plan with more and come up short. Next, let's talk about where that money goes. Your expenses fall into 2 categories. Fixed expenses are things that cost the same amount every month. Rent, car payment, insurance, subscriptions, these are predictable. You know they're coming and you know how much. Variable expenses change from month to month. Groceries, gas, dining out, clothing. Variable doesn't mean uncontrollable. It just means these are the areas where a plan gives you the most flexibility. Before we go further, it's worth separating your needs from your wants. Needs are the non-negotiables: housing, food, transportation, utilities, healthcare. Wants are everything else, and they matter too. We're not here to take away your streaming services. The goal isn't to cut everything you enjoy. The goal is to know what you're spending so you can make intentional choices. And if you have debt, student loans, credit cards, a car note, that goes on the list too. Knowing what you owe isn't scary, it's just information, and information is where progress starts. There are 2 common approaches to paying down debt. The avalanche method focuses on the highest interest rate first, which saves you the most money over time. The snowball method starts with the smallest balance, which builds momentum early. Neither is wrong. The best method is the one you'll actually stick with. Once you know your income, your expenses, and your debt, you have everything you need to build a real plan. That's exactly what we walk through in the next video. In the last video, we gathered the information. Now, let's build something with it. A budget is income minus expenses. That's it. But the real value isn't in the math. It's in what the math tells you and what you decide to do with that information. Here's how to build your budget in 4 steps. Step 1. Write down your monthly take-home income. If you have multiple sources, a main job, a part-time shift, freelance work, add them together. Use real numbers, not hopeful ones. Step 2. List your fixed monthly expenses: rent or mortgage, car payment, insurance, loan minimums, subscriptions, anything that costs the same amount every month. Write it down. Step 3. Estimate your variable expenses: groceries, gas, dining out, personal care. Pull up your last month of bank or card statements. That's your real number, not your guessed one. Most people are a little surprised here. That's completely normal, and it's useful. Step 4. Subtract your expenses from your income. What's left is your margin, the number that tells you what's available for savings, debt payoff, and the things you want to plan for. If that number is smaller than you'd like, that's not a failure. That's a starting point. Once you have your margin, you can start making intentional decisions. For savings, even a small automatic transfer, $25 or $50 a month, builds the habit and grows over time. Set it up to happen automatically, so it doesn't require a decision every month. For debt, apply anything beyond your minimum payments to one account at a time. Highest interest rate or smallest balance, whichever approach keeps you motivated. And don't forget the irregular expenses: holidays, birthdays, annual fees, car registration. Add up what you typically spend on these annually, divide by 12, and set that amount aside each month. By the time December comes around, the money is already there. One more thing, your first budget won't be perfect. It's a draft, not a contract. Track your actual spending for a month against what you planned. Adjust where needed. That's the process. And it gets easier every time. A budget isn't something you finish. It's something you use. In the next video, we talk about what happens when life changes, because it will, and how your budget adapts with you. Here's something nobody tells you about budgeting. The goal isn't to create a perfect plan and follow it forever. The goal is to create a plan that can change, because your life will. A new job, a move, a growing family, a medical bill, these things happen. And a budget that can't flex is a budget you'll eventually walk away from. First, schedule a regular budget check-in. Once a month, or at minimum once a quarter. Ask yourself, does this plan still reflect my life right now? Your expenses change, your income may change. The budget should reflect where you actually are, not where you were 6 months ago. When you're reviewing, start with your recurring expenses. Insurance is one of the biggest opportunities. Auto and home insurance rates shift, and if you haven't compared providers in the last year or two, it's worth a look. A single phone call can sometimes save a meaningful amount each month. Subscriptions are another one. Most people have a few they've forgotten about or rarely use. A quick scan of your bank statement can surface these quickly. We're not saying cut everything you enjoy. We're saying make sure every line in your budget is earning its place. Now, the unexpected. An emergency fund is the part of your budget that handles life's surprises without derailing everything else. If you don't have one yet, start small. Even 1 month of essential expenses set aside changes how a financial emergency feels. The goal isn't to avoid surprises, it's to be ready for them. Holiday and seasonal spending is one of the most predictable financial stressors and one of the most preventable. The holidays happen every year. Birthdays, back to school, annual fees, they're all on the calendar. Add up what you typically spend on these each year, divide by 12, and set that amount aside monthly. By the time the holidays arrive, the money is already waiting. No debt hangover in January. As your income grows, your budget should grow with it, intentionally. More income isn't automatic security. It only becomes that when it's directed somewhere, toward savings, toward a home, toward building the kind of financial security your family can feel for generations. Every raise is an opportunity to upgrade your plan, not just your lifestyle. This is the final video in our budgeting series, and the takeaway is simple. Know your income, know your expenses, build a plan, track it, adjust it, let it grow with you. That's how a budget becomes something that works for years, not just a month. EdiFi is here whenever you're ready for the next step. Reach out, open an account, or sit down with one of our team members. We'll walk through it with you. EdiFi Credit Union. Know more. Grow more.